Whew, okay. We are going to talk about the Devil's Mark today. And today I am not turning on my camera because it's like 87 degrees up here and I look like a wet rag. You can probably hear the fan in the background, maybe. Maybe not. But it's blasting on my face, basically. It is hot over here today. So I'll spare you the atrocities and nightmare visions of my camera. Anyway, we'll talk about Devil's Mark today and how it can play into a market maker model. The first thing we need to know is what a Devil's Mark is. And for a little while, I wasn't going to talk about this because I learned it in a private mentorship. And I didn't want to give away private mentorship stuff out in public for free. But then person who runs mentorship talked about it publicly, so now I can too. So I'm including that here because it can be a really nice signature to pay attention to. So when a 30-minute plus candle opens and has little to no manipulation in one direction. I really don't look at the 30-minute candles. Mostly, actually, I pay attention to the 4-hour candles. You can use, power of 3 on any time frame. It's kind of pointless when you get too low in the time frames, but like a 30-minute power of 3, 1 hour power of 3, 4-hour power of 3, those are all good time frames where you could actually find something happening. Anyways, when there's little to no direction or trading in one direction. So it just kind of, as soon as a candle opens, it just takes off. It doesn't leave an upper or a lower wick or whatever. It just takes off in one direction. And I'll show you what that looks like. Price just runs away. Price will need to make the wick on that other side of the candle. Price delivery will need to happen there still. So you'll commonly find that price will come back to that candle open and go a little further to get rid of that Devil's Mark. So the reason I think it's called Devil's Mark is because your candle just takes off and you're like, woohoo, like, you know, that's a good sign. We're heading in the direction you're looking for, like praise the heavens or whatever. And then you got the little devil hanging back. There's no manipulation below that candle open, so it's going to come back and bite you, you know. Maybe, I don't know. I won't get into how it could have been named, I guess, but the Devil's Mark is only valid within the time frame of that candle. So if the 10 a.m. 4-hour candle opens, takes off, and leaves a Devil's Mark, it's only valid until the next 4-hour candle opens. You're looking at it on a 4-hour kind of basis. So if it doesn't come back to that opening price to put the wick in the other end before 2 o'clock, then you don't pay attention to it anymore. Okay? Once that time frame closes, no longer point of interest, I'm obviously speaking ahead of myself. Here are some examples. I'm going to show you some examples here on this page and then some examples from my Discord, which are probably the same ones. So we'll see how that turns out. But as we can see here, 2 p.m. opens literally right on that candle, and it just takes off. You see how there's, oh my goodness. This way. There we go. So you see on the 4-hour candle, if you were to look at this on a 4-hour time frame, I just have this nice big candle here. So I don't have to do that. There's no wick. How many candles out here do you see with no wick? On the lower time frame, it's a whole lot more common, but go look on like the hourly, the 4-hour, the daily. You really don't see a lot of candles without wicks on both sides. That's why this is as significant as it is. That's why it's something we pay attention to. So it leaves a Devil's Mark right at the opening price level and trades away. This is the manipulation of that 4-hour power of 3. We traded down into something, which I did not mark. And you can then measure your standard deviations once you get a market structure shift and find out the high of the candle's probably going to be up here. Well, that would be nice because we've got a devil's mark to draw us back, and we could go as far as up here, you know, maybe buy side up here. It's a nice market maker buy model. Okay. I think this is the after shot. Oh, look. Look at how quickly it came back to that opening price. It is a signature that is referred to by the algo. Look at the speed and intensity that it wanted to get there. Why? I'm not sure. There's probably something in the algo. I believe in the algo. So we'll go with that. Maybe buy stops are hanging out up here. Maybe some retail strategies like to see this and they put their stops there. I don't know. Whatever it is, there's liquidity there and it wants it quickly. So it comes back to it. Very commonly so. Once it has it, it does its little cooling off. We hit 2 to 2.5 standard deviations. So we're going to, without really, well, I guess here did do some retracement off of the silver bullet zone. But we do some retracement back into the silver bullet zone area and then take off and hit -4. So power of 3 ended for 4-hour candle. It kind of ended up here somewhere would be my guess. I do not remember this day. Next example is very similar. Most of this stuff really looks quite similar. And this is a good example of this exact candle is the 2 o'clock opening price candle. So we traded up like a point, maybe not even. So we do have a tiny little wick, but on a 4-hour time frame, is that really, compare that wick to the other wicks, you know, around it, is that really enough to consider this a manipulation move into nothing and to have this be distribution? I don't think so. So what we're going to see then instead is this is the manipulation, and we're going to come back to this during the distribution. And again, when we get close to that opening price, look at the candle's behavior. It wants it. So the devil's mark can be very significant, and this all happened. This is the 1 minute chart, so this is only an hour maybe. But it makes a really nice little buy model in here, right? The other examples, this is one from Discord. That's the one we just looked at. Let's see what else I got. That one. This one, kind of scrunched together, but can I zoom up? There you go, bud. So the 10 o'clock candle opened right there, shot straight down. Down here was a standard deviation level from the higher time frame. I did not catch it, but this is where I anticipated whatever that standard deviation was to end here, or some kind of sell side. Something happened here, as it always should. You should always manipulate into something. And then it trades away back towards the old devil's mark there, that 10 a.m. opening price. So all that's manipulation, and then you get distribution. I don't know how far this went. I don't think I screenshotted it. But I would gather it went somewhere up here. That's 0 to 1, 1 to, or 1 to 0, then 1, 2, 3. Yeah, I bet 4 was way up here somewhere. So there's that one. Here's a bearish devil's mark. Let's look at that. Those are all been bullish so far. Let's see. Daily devil's mark. So this was oh, right here. Whoops. Can you see that on the screen? Yeah, I think you can see that on the screen. I'm going to zoom in, move this. That's as far over as I can go. Let me get rid of that so I can... Yeah, you can see it. Okay. So you see this line. This is the 6 p.m. open, the daily open, and it just went boop and started going. It did not come down at all. So not only do we have a new day opening gap, I think this was a Monday because this also looks like a new week opening gap over the top of it. And or a new day opening gap and volume imbalance or a void, whatever this is. It's got a devil's mark in there too. So we've got some stacked PD arrays here along with the devil's mark, and this is valid until the end of the day, till market close. So I expect some manipulation, any trading in the direction that it's going, which is above the opening price. This is all manipulation, and you'll get distribution back down to it and through it to make the wick on the other side. And we do just that. We manipulate overnight into London, up into this high time frame PD array, and we distribute for New York right down into that devil's mark. That can be seen in more detail over here. This was the actual trade I took in regards to it. 9:30 open, manipulated up, came down right up into a fair value gap, and I shorted, I don't know what, it 15-ish points maybe, and called it a day. Like, that's all you need. And it cooled off a little bit, kept going, cooled off a little bit, kept going, blew right through that devil's mark. So that is not really a market maker model. I mean, kinda on a bigger scale, but kinda not really. Oh, this is okay. So yeah, that is the devil's mark. I like to keep an eye out for it. It's not incredibly common, but when you see it, there was one that happened today. I think it was a 10 a.m. open, and price shot immediately up, and then within 10 minutes, it shot immediately straight down again. But the whole day today was, gosh, I don't know, maybe a 50, 60 run up, and then it came right back down, and then right back up, and then right back down. It was like a 60 to 80 point range all day long today in particular, but I'm not going to go and talk about and show that because it's not important. So anyways, that's Devil's Mark. If you have any questions about it, as you should know, my Discord is in the link in the description, and feel free to join up, and we'll talk. Thanks for checking it out. Have a good day.